what does an activist have an opportunity to do? So you look on slide 18, this is a typical restaurant activist playbook. Number one, sell real estate and company-owned stores to become an asset-light business model. Not an opportunity for Dave & Buster's. Streamline G&A. Now that is an opportunity for them technically, but you'll see in a second they're already doing that, and they're reinvesting that into the business. So it's not there's not this one-time opportunity to cut G&A to improve the financial performance. They need to reinvest in the business. Sell off non-core assets. That's not available to them. Increase leverage and return cash to shareholders through dividends and share repurchase. They are doing that already, and that's. But the problem is that is, to me, in my mind, that doesn't increase shareholder value because you're leveraging your future. And then the only thing that really is available to them is 5, and that's cut capital spending to refocus on operations and return the excess cash to shareholders. And that's really, frankly, the only thing that an activist can do. So on slide 19, this is from the latest deck for Play, and their 5 priorities to maximize shareholder value. Revitalization of existing stores. That is absolutely imperative, but again, that takes cash needs up, not down. Building a deeper guest engagement. If you look at how they describe that, that's effectively discounting for the most part. Disciplined cost management to fuel growth. That's the G&A cuts, and the reinvesting back in the business. Investing in highest return new stores. Now we're going to get to this in a second, but there really is little opportunity to invest in stores for growth. So, and at the pace they're growing today, I would argue that's actually destroying shareholder value and not creating shareholder value. And then continued capital return to shareholders. Well, again, like I said before, that's really the only thing they can do. And just to get back to the build or invest in highest return new stores, they've spent about $300 million in the last 2 years opening up stores, and their EBIT is down $24 million. So it's hard to argue that deriving that investment in new stores is actually increasing shareholder value.